If you are self-employed and applying for a mortgage, you are going to fit into one of two buckets. Bucket number one is what we call qualified business for self, and bucket number two is what we call stated income business for self. Let's explore each of these buckets separately. Bucket number one is where everybody wants to be because qualified business for self borrowers get the benefit of the most favorable rates, terms, conditions, and features of a mortgage from a lender. However, in exchange for those favorable terms and conditions and rates, a lender wants to see very specific information from you. The focus of the income determination for a qualified business for self borrower is focused entirely on your personal taxable income, not your business income, but after everything's said and done, what you show to Revenue Canada and pay personal income tax on. And of course, that's a problem because anybody who is self-employed wants to keep that number as low as possible. And so what the lender will ask for is a 2-year average of your line 150 from your notice of assessment to determine what your annual income is for mortgage application purposes. However, we have a problem because anybody who's self-employed will know that they want to keep their personal income as low as possible and have as many write-offs as possible or shield as much income as possible in a corporation. And so for that reason, the second bucket of mortgage qualification exists, and this is what we call stated income business for self. Let's explore a little bit further. Stated income business for self qualification takes the focus away from your personal income taxes that you show to Revenue Canada and takes a much more holistic view on your overall business application or overall business operation. And so it recognizes that the lines between personal and business are very often blurred for anybody who's self-employed. And so the lender will look at an overall view of your operation, your business, to determine your credit worthiness for a mortgage. So there's a lot more flexibility, but in exchange for that flexibility, there's more risk from the lender's point of view. And so therefore we have higher interest rates and fees that are typically applied to stated income business for self applications. Now, before you turn this off and you say, no, I don't want to pay fees and I don't want to pay higher rates, I'll tell you what's worse than higher fees and higher rates, and that is paying more income tax on higher income to Revenue Canada. My name is Chris Mulder. I'm a Toronto mortgage broker. If you are self-employed and looking for more information about how to apply, I invite you to reach out anytime. You can find my contact information below. Bye for now.